The next meeting is the Committee on Finance, which will be chaired by Commissioner McCabe. Commissioner McCabe.
Thank you, Chairman. Today's meeting of the Committee on Finance is being held in public session in its entirety. At this point, I ask the Secretary to advise those present of the composition of the Committee on Finance and any commissioner recusals on the matter before the committee of today's meeting.
Thank you. Committee on Finance is composed of Commissioner LaBarbera, the committee chair, Commissioner McCabe, the committee vice chair, and Commissioners Fine, Kelly, and Richardson. All committee members are present with the exception of Commissioner LaBarbera. In addition, also present today are Chairman O'Toole, Vice Chairman Linford, Commissioner Bolwich, Eve, Fisher, and Helmy. There are no requests for action, no recusals required.
Thank you. I call on our Chief Financial Officer, Libby McCarthy, to present the 2024 financial performance results. Libby, the floor is yours.
Thank you, Commissioner, and good afternoon, Commissioners. Just starting out with the audited condensed financial information that I'm presenting today is best understood when read in conjunction with the financial statements of the Port Authority, its component units, and the accompanying notes thereto. That will be available on our website within the next day or so. In addition, I want to note that these results are prepared in accordance with the Port Authority's bond resolution, which is the basis of reporting that we use to set our budget and is included in the 2024 audited condensed financial statements prepared on the basis of generally accepted accounting principles. Overall, the Port Authority achieved solid financial results for 2024, allowing us to meet the needs of increased activity at our facilities and ramp up our annual capital spending to deliver transformational infrastructure assets for the region, which we were required to lower during the years immediately following the COVID-19 pandemic. Net operating revenues for 2024 totaled nearly $2.7 billion and are $163 million or 6.5% higher when compared to 2023 results. Further, after factoring in our net non-operating revenues, including the items noted here, the Port Authority's net revenues available for debt service totaled $3.8 billion for 24, nearly $160 million or 4.4% higher as compared to 2023. This is a key metric that determines the capacity that we have to support our capital plan. And this strong performance has allowed us to scale up that annual capital spending back to pre-COVID planned levels. I'll discuss the key drivers of this change in more detail later. First, we'll look at activity. This slide shows our annual activity levels at our bridges and tunnels and aviation facilities, which are the Port Authority's two largest line departments and contribute the majority of our net operating revenues. For each business line, we have included 2024 volumes in green and 2023 volumes in light blue. The TB&T activity is on the left and the aviation on the right-hand side of the page. Bridge and tunnel activity in 24 was essentially flat year over year as compared to 23, with more than 122 million vehicles utilizing our crossings. Of note, 2024 auto volumes were slightly lower than the previous year, but truck volumes surpassed 23 levels by more than 4%. At our aviation facilities, the Port Authority reported our busiest year ever for the second consecutive year. 146 million passengers used our airports in 2024, an increase of 2 million passengers over the prior year. This strong 1.5% year-over-year growth was primarily driven by increased international passenger activity throughout the year, up by more than 5%, with domestic travel down slightly versus 2023. On this next slide, we show PATH activity on the left and port activity on the right. PATH, like other mass transit commuter systems in the region, continues to see a depressed level of ridership due to shifts to remote and hybrid working environments. PATH served more than 57 million riders in 2024 and experienced a meaningful uptick in activity versus the prior year, finishing 13% ahead. We have included the 2019 activity levels of 82 million riders in gray to illustrate the path level of ridership remains low and is currently at about 70% of pre-COVID levels. However, it's important to note that in the latter months of 24, we saw a monthly ridership as high as 74% of pre-COVID levels following the Labor Day holiday. Our ports remain the busiest seaport in the East Coast and marked its third busiest year ever in 24, handling 8.7 million TEUs. It is consistently among the nation's top 3 container ports based on volume. As compared to 23, activity in 2024 was 11% higher. We attribute most of this increase to suppliers rebuilding or further front-loading their inventories to mitigate the potential supply chain interruptions, mostly toward the end of this year, in anticipation of potential tariffs and their effects on global trade patterns. This all translates into our gross operating revenues, and this slide here shows you the breakdown of the agency's revenues as compared to 23. Gross operating revenues for 24 of $7.1 billion increased $387 million, or nearly 6% as compared to 2023. 2024 toll and fare revenues were $98 million higher than 2023, driven by our annual CPI-based toll rate adjustment in January of 24 for our bridges and tunnels, as well as the higher path fare revenues given the higher path ridership I just discussed. Rentals were $190 million higher, mostly driven by increased activity at the airports and marine ports, as well as new rents associated with various airport redevelopment projects at Newark and JFK airports. Aviation fees were $113 million higher and primarily consist of cost recovery revenues. This large increase is primarily associated with the new airline cost recovery agreements that went into effect in January of 2024, as well as general cost recovery for the higher activities at the airport. Lastly, I want to note that parking revenues are slightly down, mostly due to a decrease in parking revenue in connection with the redevelopment at JFK Airport. Moving on to operating expenses, total operating expenses in 24 totaled $4.3 billion, reflecting an increase of $224 million or 5.5% as compared to 23. A majority of this increase is due to the general inflation increases and higher activity levels at our facilities. In addition to these drivers, healthcare expenses for active and retired employees, including the non-cash actuarially determined retirement benefit, and increased above general inflation as a result of market trends. In addition, employee compensation and contract services expense increased above general inflation as a result of heightened security needs, traffic mitigation costs for JFK redevelopment work, increased path costs to improve service, and increased maintenance dredging at our marine ports. Finally, the revenue-based rents we pay for our airports and certain marine ports were higher, given the higher revenues at those facilities. Moving on to cash flow. Cash from operations for 2024 of approximately $3.2 billion increased $288 million versus the prior year, or nearly 10%. This is consistent with the growth in net operating revenues I described earlier. Cash and investments at year-end totaled $5.9 billion, an increase of approximately $500 million, which is primarily due to that higher net operating revenue growth. And in addition to those cash and investments on hand at December 31st, Port Authority had approximately $436 million of additional sources to support the capital construction program, consisting of unspent bond funds currently in the capital fund and available bank revolver borrowing capacity. When excluding the General Reserve Fund and capital funds, cash and investments at December 31st of this year represented 324 days of cash on hand. Finally, Our bonds and other financing obligations at the December 31st, 24 totaled $28.1 billion, which is a decrease of about $70 million compared to the prior year, as scheduled retirements and refundings of debt exceeded our issuance of new bonds. This concludes my remarks, and I'd be happy to take any questions.
Thank you, Libby. Do any commissioners have comments or questions regarding the report? Hearing none, this concludes today's meeting on the Committee on Finance. Chairman?